What's up, guys? So this is going to be a very specific video for the enhanced order block, also known as EOB, enhanced order block. So if you haven't already, go check out the PDF file under the education channel in the Discord. Get familiarized with that guide, okay, where you can see the difference between a regular standard order block everyone views as, and then my three candle enhanced order block. So I have plenty of videos discussing this, but I see some guys are still confused on it. But all it is when we have a narrative already arrived, we have to have a directional bias. We want to be able to have a draw on liquidity, okay? So let's say our draw on liquidity is higher and we want to attack some old highs up here. The market had come down and we filled in some sort of fair value gap down here. This is just one example I'm going to use. Let's say this, one second. Let's say we have a fair value gap down here, and that's what these two black lines are delineating. Price then trades down into the fair value gap with a bearish down close candle like so. And then we get a response away from that with a larger bullish engulfing candle. Okay. I would then expect the very next candle to power of three, open, trade down into the enhanced order block. But we want that bearish candle to have a wick on it. And the larger the wick, the better. Okay, we want to see it with a nice wick, and we want the bullish candle to engulf above the top wick of that bearish down close candle. So we traded down into a bullish fair value gap down here. We're overall bullish, but price had been trading lower, trading lower. We took out some lows, we traded into a fair value gap, and then we see price engulf above the last down close candle. So I would expect the next candle to open, start trading down into the zone right here. This is going to be the EOB zone. It's where I'm drawing out the wick to body of the bearish candle. Okay, that's the enhanced order block. This is the EOB candle, the black bearish down close candle. The next candle opens, we trade up, engulf above the wick of that bearish candle, and then I want the next candle to open. So what this does is it confirms a change in the state of delivery. So this particular example right here is my CISD EOB, change in the state of delivery, because at one point in time, the market was trading lower. Then we filled in a PD array in the form of a fair value gap. And then we see this pattern occur. This pattern, the engulfing EOB pattern right here, forms at a level we were anticipating a reversal to happen. We wanted some form of support to happen inside of this fair value gap. And then they confirm it when this candle opens and trades up above the wick to body of the bearish candle. So then the next candle opens, and then we trade down into that EOB zone, and then they start to, when it's trading down, it's a bearish candle. So it's going to be a bearish candle as it's into this zone. But let's say this is a 5 minute time frame, okay? We want to wait for that 5 minutes to close. So the very first 2 minutes, 3 minutes can open, trade down and be a bearish candle while we're just chilling in here. But we want to wait for that candle closure, because in the last 2 minutes of that 5 minute candle, they can start to trail away and leave and close a bullish candle. So the wick to body of that bearish candle is the EOB, okay? That is the change in the state of delivery, EOB. And I'll show you guys some examples here in a minute. Sometimes you'll see it close just shy of the top of the wick of that bearish candle. For starters, you don't want to try to take those. You want to start getting familiarized with the full closure above. But for me, I'm super experienced with this, and I just know other things where I'm able to go in there and take a trade even though we didn't close above that wick. But you'll start to notice that yeah, even if we don't close above that wick high, it can still open the next candle, trade down some, and then trade away. And again, this is an example if the market is trading down lower, trading down, trading down, trading down lower till we find an area of support, which is this fair value gap, and then we create this candle pattern, this three bar candle, three candlestick pattern. Now, this red line right here could delineate a daily time frame, and we come down into a daily fair value gap, okay? And then you could drop down intraday, like the very next day when that next daily candle opens up, and now we're looking at a 5 minute time frame, but we're still inside of that daily fair value gap. We're anticipating bullish price action from here, and then you might see this pattern form on the 5 minute time frame inside of a kill zone after sell side liquidity had gotten purged at the 9:30 opening bell. But again, this is just me telling y'all what the candle pattern looks like. And then we attack buy side liquidity. The other pattern can be we trade it down to a level of support and they don't create. The other pattern will be a continuation pattern, okay? It's where price trades on down. We take out an old low. Hold on. So it's where, and this is fractal, so it works on all time frames, okay? So I can't really sit here and give you 30 drawn out examples, but I can show you some examples in just a minute, but with live price action. So the continuation example is going to be, let's say price, it doesn't matter what time frame it is, but we trade on down, we take out, that just looks ugly. Hold on. Let's try it. Let's try it again. We trade on down, prices trading like this. So this is my favorite one. One of my favorites where we, let's say 9:30 opens, we stab down. There can be a PD array anywhere on the left side of the chart. Okay, you filter through your time frames. And even if there's not a PD array, we're going to note that price took out sell side liquidity. Okay. And then let's say something occurs and then we start trading up. Let's say right here on this pullback, here's a fair value gap. Price had traded into right here. Okay. So the 9:30 opening bell on NASDAQ takes out sell side liquidity. We trade down to a level of support and then we start to break up higher. We create displacement, retrace back into a fair value gap. And then we're physically telling ourselves, okay, we just respected this bullish fair value gap and now we're trading higher. And then here's another time when you would see this candle pattern work. Let's say we get a new hourly candle open. So let's say it's 10 a.m. now, but we're looking at a 5 minute time frame, but we're expecting the 10 a.m. candle to trade up and take out some highs up here or a premium sell side imbalance up here. So our draw is higher. And then we've just realized this is what's happening. We didn't take the sells here. We didn't buy here because we didn't see this until price got here. So we're telling ourselves what has most recently happened. But now, yeah, odds are price is going to want to take out this high now. Whoops. And then eventually trade up to this sell side imbalance up here. So that's going to be our draw today. So we know we're going higher. We know the 10 a.m. candle, that 1 hour candle, should close bullish. But we're looking at price on a 5 minute time frame right now. So here is that next candle pattern. They'd print a 5 minute down close candle. Okay. And it has a nice wick on it. And I can't put that line in the direct middle. I don't know why. Hold on. Let's see if I can do it now. There we go. There's our bearish candle right here. And then we get a bullish engulfing candle. So I'm going to use this as my continuation pattern. It can close above a good bit, but we don't want to see it do this. Okay, if it were to do this, we're not going to expect the EOB to form. We would then expect just open power of three, rebalance some of that bullish candle, and then continue higher. So when they trade and they close way up above the EOB, I don't really care for that one too much. You want to see them trade up above it just a little bit. And that's my continuation pattern. So my overall objective is up here. So now I'm just going to take a trade. I'm going to wait for the next 5 minute candle to open. Buy when we come in. Buy when we come down into the EOB. My stop loss gets placed at the EOB candle low, which is down here. I'm going to enter at the very top of the wick, and then I'm going to attack my premium buy side liquidity up here. So that's the trade. Okay. My EOB zone, again, is going to be, let me take this off. My EOB zone is going to be wick to body. I extend that level out in time. So when you see me draw out a zone on a candle wick, that's what I'm drawing. I'm just drawing an EOB zone. And now, my voice is all messed up. Okay, then I'm going to wait for that next candle to open, trade down into this zone. Stop loss gets placed below that EOB order block low and target buy side up here. And this 5 minute structure is going to create and it's going to make that hourly candle expand bullish. So it's like candle anatomy. We're expecting the hourly candle to expand higher like this, but right here, even the red line right here, this is all 5 minute price action. But this large candle right here, all right, this will be a perfect representation, okay? So let's say the 10 o'clock candle opened up right here. That's what all this red swirly line is. At the beginning of these red lines is a 5 minute time frame or a 1 minute time frame, whatever you want it to be. But that's 10 a.m. When we trade down and take out sell side liquidity, that's going to put the candle low on that 10 a.m. candle. That 10 a.m. candle is going to close when? At 11 o'clock. It's 1 hour worth of time. This pattern right here is down here. The opening price is all this consolidation right here. Then 9:30 hits. We trade down, or it can be 10:30. I don't care. Let's say this is the 9 a.m. candle, okay? At the beginning, we open. That's this opening price. Now we're consolidating. And then we trade down at 9:30, putting in this wick. And then we see the 5 minute time frame do this right here, fill in a fair value gap. And then respect that and start trading up higher. Once we trade above the opening price of that 9 o'clock candle, that's when we're putting in a green body. We're expecting this hourly candle to come up here. So that's when we see this 5 minute candle pattern right here on a 5 minute time frame. We expect the next 5 minute candle to open, trade down at first. It's going to be a bearish candle. But then when we start to wick away from it and trade higher, it's going to be a nice bullish candle. And then that's going to bring up that hourly candle. So that's your continuation EOB pattern right there. And you guys are going to see me do it live. And I have other examples I can go show you similar to, and there's going to be times where price can come into the body. You don't want to see them go below 50% equilibrium of the bearish candle body. But you'll notice sometimes they do. So here's your 5 minute structure to create your hourly candle. So I know gold just had a beautiful example of all of that. So now let's go to gold. So now here's a live chart example, okay? Hold on. Gold starts, here's the change in the state of delivery one. That's what this example is going to be. Gold is trading lower. We're trading lower. We're trading lower. Gold fills in a buy side imbalance, a bullish fair value gap right in between here. What's the trend been on gold? Well, it's been stuck for a while, but the overall trend is bullish, as you guys may know. Okay? It's going higher, 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 higher. They most recently filled in this buy side imbalance over here. They respected that, traded higher. Now we're stuck. Here's another bullish fair value gap, buy side imbalance, whatever you want to call it, right here, that we traded down into 3 times. 1, 2, 3. And then on that third time, we traded away, creating a buy side imbalance. Okay. So here is an area where if gold's going to go higher, if we're getting ready to break out and take out these highs up here, then they should find and hold support inside of this new buy side imbalance after coming off of this old one, and we're respecting it. Then we respected this one also down here. So we're expecting an area of support to hold. Price is trading down, 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 down. We fill in the imbalance, the fair value gap, whatever you want to call it. And then what candle pattern prints after filling in that imbalance? We have that down close candle here with the wick on it. Bullish engulfing. Notice when that bullish candle opens, a lot of times you want to see it trade down below the previous bearish candle low first. That's also a great sign because they're taking out liquidity below that candle low. And then we expand and close above that last down close candle right here prior to the bullish engulfing candle. So your EOB zone is going to be the wick to body, extend that out in time. So now we want price to hold up as support right here because we just filled in this imbalance. We're overall bullish and we think price is going to take out buy side liquidity. And then you can break this down to all your lower time frames and find other confluences and other patterns that you might trust and believe in, or just anything that your eyes and knowledge can see that would represent and support price going higher. So now when I hit play, what does price do? The next daily candle opens, we trade down into the body of the EOB and then close here. Next candle opens, we trade down one more time, take out that candle's low, but we're still inside of the upper portion of the EOB. So sometimes they can have some manipulation, and they came down pretty far and they dug into that order block. But look at the body closures above the order block EOB body. So the wicks do the damage, bodies tell the story. And then we expand away, creating another imbalance with this bullish candle that expanded away. And this was last week's price action. Once they create that imbalance, we have a fair value gap. This candle opens, fills in the fair value gap, trades down into this bearish candle, which is another bullish order block because it's the down close candle prior to the move higher here. So we fill in the fair value gap, bullish order block, continue trading higher. Once this candle closes up here, here's another example of an EOB. Take the wick to body, extend it out in time. We're expecting higher price action. This daily candle opens, trades down into the wick of the EOB, and then we expand higher. And where does price go ultimately? Buy side liquidity resting above here. So that's your CISD EOB right here. And it's a candle pattern that can tell you when the trend is fixing to change or when they have confirmed a trend change. That trend change to me got confirmed way down here, but everyone else, they're probably still on their hands waiting as prices like way up here before they find a trend change. We get in and we get the confirmation way down here with one candle prints. So this would be your CISD EOB, change in the state of delivery. But then this one right here, this is your continuation example. So I don't know what else you guys really want to know, but I hope this video was able to help you guys kind of understand a little bit more. If not, like I said, I don't know what else you guys are looking for. All right, peace.